you. Here we go. Hey guys, Jennifer Foley, Remax, and I'm here with mortgage broker Varan. Varan, you want to introduce yourself?
Sure. My name is Varan Karunanantham. I'm a mortgage co-founder and a mortgage agent with iConnect Mortgages powered by Domain Lending Centers. And thank you for having me on the call, Jennifer.
Excellent. Well, happy to have you here. Thanks so much for joining me today. So one thing that I really want to talk about is we've been hearing on the media a lot about deferring mortgages. And I think that there's some misconceptions out there about what's going on and what this means. So I'm hoping that you can shed some light on this and give our viewers some further understanding of what that all means for them, the bigger picture, right? How it affects principal, how it affects interest, and those kinds of things.
Perfect. So mortgage deferral programs is available. Number one is available with all the lenders, not with the major banks.
Okay,
so
that's good to know.
Except the private lenders. Because the private lending doesn't fall into the Canada Mortgage Act. So if you have a mortgage with major banks or monoline lenders such as First National, MCAP, Street Capital, RMG, or trust companies like a Home Trust or Equitable Bank, everyone is honoring the mortgage deferral programs.
And the major banks.
Some of the banks may not honor right away for the 6 months. They might be doing 1 or 2 months at a time, rather than doing 6 months at a time. Major banks are probably doing 6 months at a time. So that's being said that so what happens when you defer a mortgage payment? You're not paying the principal.
Okay.
So you're not making any payment towards the principal, and the interest that you are deferring it is going to be accumulated into the outstanding balance.
So what people need to understand too is that when you make a mortgage payment, that that payment covers a portion of interest and a portion of the payment. So when they're deferring, essentially, in the long run, you're paying more.
You pay more because the interest is getting accumulated into the outstanding balance, and your amortization could be extended a little bit. So, but we are in a pandemic and we are in a very uncertain situation.
Exactly.
If you cannot make the payment, the only option is to skip it. So a lot of other question comes across to us is, if I have an investment property, I have a rental property, my tenant is not paying the rent.
Yes.
Can I skip the payment? Absolutely, you can.
Yeah,
absolutely you can.
Which is good reassurance for people, because if there isn't any money coming in, or the amount of money coming in is less than what normally you would have, then certainly this is a great option for people, and it's amazing.
It's a great option, and also you cannot take any legal action against your tenant because of what's been the comment is being issued by the government of Ontario. So there's no eviction, there's nothing can be done, and I'm sure the tenants are also going through some tough times as well. So it'll be a good idea to call the lender and ask them to defer the mortgage payment.
Okay. Now let's talk a little bit about interest rates and what's been happening with them, because the Canada bonds rate has been going down, but we're not seeing interest rates going down. From what I understand from you, we're actually seeing the opposite effects, that interest rates are starting to go up again.
Indeed. So the interest rates are definitely come down in terms of the overnight rate and the bond rates. But however, mortgage rates has gone up. So the reason that the mortgage rates are going up is nothing to do with the economy, because the economy is slowing down. So we can see that that's the reason the Bank of Canada is lowering the overnight rate is up to 0.25%, and they're talking about possibly another rate cut in April. That's what they're discussing about. So then everyone's asking why the mortgage rates are expensive. The mortgage rates are expensive.
Let's put it in perspective. They're not expensive, because interest rates are still the lowest that they've ever been for years, right? In terms of the big picture, right? If we look at what the interest rates were in the 80s, and we look at what they were in the 90s and the early 2000s, and that sort of time frame, I mean, interest rates somewhere between 2.5 and 3.5 sort of, is cheap money in the big picture, right?
Oh, it's still cheap. It's still cheap. And so I think we are comparing to the rates a month ago or 3 to 4 weeks back. Compared to 3 to 4 weeks back when the economy is slowing down, when the Bank of Canada is reducing the rate, everyone's question is why my mortgage rates are not cheap, is expensive than 3 to 4 weeks back. So the reason for...
These are questions coming to you from clients that want to either refinance or try to jump in on a lower rate.
On a purchase, or they want to convert it. So for an example, if you think about it, like a 3 to 4 weeks back, we were offering a 2.64 on a 30 amortization on a conventional mortgage. The same mortgage is 3.14% right now.
Okay.
It's still cheap on a fixed term. The rates are not ridiculously high. The rates are still...
You're there.
The rates are still cheap. The rates are still cheap, but what has happened is the COVID-19 has made an impact on the mortgage rates. So that's being said that the banks are not seeing money coming in. So that's mean they are not getting any deposits. The small businesses are not there. So they are not seeing the money coming in. And also they are not having payments coming in because they're not collecting the interest because the borrowers are calling to defer the mortgage payment, line of credit payment, credit card payments, and a car payment. So we all know the banks make money by lending. So they are not making money.
Yeah.
And right now, we also know the banks borrow on millions or billions of dollars to lend money. Mm-hmm. So right now, for investors, the banks has been considered as high-risk borrowers.
Okay.
The clients are not making the mortgage payments. The clients are not paying the line of credit payment. You are not being profitable because you are not earning money. And now you become a high-risk borrower. So what that means, investors want a higher return. What caused this? Not the economy, COVID-19.
Okay.
So that's the reason the rates are higher compared to 3 to 4 weeks. Is it historically high? No. It's compared to a few weeks back, it's high. Okay. So my piece of advice for my clients is if you have a variable rate mortgage, stay put. If you're purchasing a home, take a variable because the prime rates are coming down. And even though you are not getting a prime minus discounts as you used to, you're seeing the mortgages on prime.
You're good.
Sorry, I'm getting calls coming in, a prime plus. But still, if you're taking a 5-year variable rate mortgage, your rates are at 2.6%.
Okay, so that's where people are seeing the lower rates is on the variable mortgage.
Variable mortgage.
Yeah, which means that it basically fluctuates.
But we know this pandemic is not forever. Things are going to get better and the bonds are cheaper and the ripple effect of the economy is to come down is going to take some time. So it may not happen in 2 to 3 months, but you can always go from a variable rate mortgage to a fixed term mortgage. But if you're one of the person you want a 5-year fix, it's not a great idea to take a 5-year fix in this market because we know the rates are not going to be staying at 3.14% forever.
The difference between a variable and a fixed is that a fixed mortgage allows you to have the same payments at the same rate and same terms.
For next 5 years.
Yeah. Okay.
But variable is fluctuate. But you can go from a variable to a fixed, but you cannot go from a fixed to a variable. Okay.
All right. Well, that's great information. Thanks so much. And we'll talk to you in a week's time and we'll see where things are at in the mortgage industry.
Thank you, Jennifer. Have a good day.
Thanks. Have a great day.